Did you listen to me in early March when I rated Celsius as a buy? An implied share price of about 38.50, which compared to the current close is a discount of 38%, which is a buy rating. Well, since that recommendation, Celsius has more than doubled and crushed the market by 7.1x. Don't worry if you missed out, because I just spent the last week updating my full fundamental analysis on Celsius based on their recently reported 2Q25 results. Trading at 59.57 per share, I have a hold rating on Celsius stock, but it's very close to a buy, and I will give you my ideal buy price later in the video. Today, in under 20 minutes, I will provide you exactly what you need to know if you want to invest in Celsius. I will give you the positives and the negatives from the 2Q25 results, a breakdown of the three financial statements and my Wall Street valuation model, what other analysts on Wall Street say about Celsius, and my conclusion on the future of Celsius and what you should do. Why should you listen to me? My name is Ken Freeman. I'm a CFA charter holder. I'm also a professor of finance and economics. I have 20 years of Wall Street experience, and I'm the guy that investment banks like JP Morgan and asset managers like BlackRock hire to train their financial analysts on Wall Street. In my research, I discovered 7 things that got me very excited and 7 red flags to watch out for with Celsius. If you're enjoying this, please smash that like button. Celsius delivered record results in 2Q25, primarily driven by the acquisition of Alani Nu. The company significantly exceeded analyst expectations on both revenue and earnings.
Any news?
Let's cover the red flags first. The Alani Nu deal was financed with a new $900 million term loan at about an 8% effective rate. This raises fixed costs before a single extra can is sold. While this may seem like a red flag, the principal payment is only 1% per year, which can be easily covered, and they have full capacity under their revolver.
As of June 30th, total debt outstanding consisted of the $900 million term loan used to fund a portion of the Alani Nu acquisition, and our revolver remains undrawn.
SG&A jumped 107% year over year due to the addition of Alani Nu and acquisition-related costs. Sales and marketing did benefit from outsized growth relative to the timing of investments. And these expense increases did not hurt margins, which we're going to see later in the model.
Sales and marketing expenses were $152 million, or 20.5% of revenue in the second quarter, benefiting from some outsized growth relative to the timing of investments made in the quarter.
Large sales by top insiders can signal caution, as leaders may be taking profits rather than adding to positions.
No bueno.
We need to temper this with the reality that many insiders are selling shares that they receive from options rather than reducing their core position. More than half of revenue ran through Pepsi in 2024, so any hiccup in that relationship could hit sales quickly. Receivables concentration with Pepsi means that working capital is tied to one counterparty, adding collection and timing risk. The good news is that Pepsi, as a percentage of revenues and accounts receivable, have both been trending downward.
Celsius food service volume grew 9.8% year over year in the second quarter, representing approximately 12% of our North America Celsius brand sales to PepsiCo.
ACV, a measure of market penetration, was at 99.3% for the quarter. Q2 revenue growth leaned heavily on Alani Nu's $301 million contribution, while Celsius contributed $438 million.
For the second quarter ending June 30th, 2025, the 84% year-over-year increase in revenue was primarily driven by $301.2 million in revenue from the Alani Nu brand. The Celsius brand contributed $438.1 million of revenue in the quarter.
The company expects that tariffs will have a greater impact in future quarters. While international revenue is growing rapidly, it is currently a small portion of the overall business. Even with the 40% contribution from Alani Nu, year-over-year retail sales were only up 3%. The beverage market is very competitive, and Celsius needs to continually defend its number 3 position.
Last quarter they reported plus 9% revenue. Alani Nu chipped in about 40% of Q2 sales at $300 million.
Here's what got me really excited. Retail dollars are still climbing fast, showing that brands are moving off shelves, not just sitting in distribution. Share gains means that Celsius is taking a bigger slice of the U.S. energy drink pie, even as competition heats up.
Retail sales grew 29% and volume increased 31%. Reflecting broad-based consumer demand and strong execution at retail.
Despite integration noise, margins held up thanks to mix, cost savings, and scale, showing that discipline is on the cost side. To not only get growth, but also margin expansion from Alani Nu is a compound effect which increases value for shareholders.
Q2 consolidated gross margin held relatively steady at a 51.5%, down 50 basis points year over year, despite incorporating Alani Nu's lower margin profile beginning in the second quarter. Overall gross margin was supported by favorable material cost, improved production yields, leverage gains through our vertical integration initiatives, and strong product and channel mix.
The quarter wasn't just big on the top line thanks to Alani Nu. It also translated to a hefty EBITDA margin, evidence that the business model scales.
Celsius Holdings reported revenue of $739.3 million for the second quarter ending June 30th, 2025. The 84% year-over-year increase in revenue was primarily driven by $301.2 million in revenue from the Alani Nu brand.
Alani Nu has 22% U.S. household penetration and repeat rates over 65%, so it's not just a one-off. Innovative seasonal hits like cotton candy are breaking records at Walmart, and customers are already buzzing about the new Witch's Brew, which keeps the brand fresh and customers buying.
The Celsius Holdings portfolio has reached a 43% household penetration, with the Celsius brand at 34% and the Alani Nu brand at 22% household penetration, with repeat rates over 65%. Alani Nu showed extraordinary strength and innovation in the second quarter, led by Sherbet Swirl and cotton candy, which drove sales incrementality across the business. Alani Nu cotton candy set sales records in its debut at Walmart by orders of magnitude. And Alani Nu consumers are already buzzing about the recent arrival of Alani Nu Witch's Brew, which this year is accompanied by another great LTO, Pumpkin Cream.
Despite the massive acquisition of Alani Nu, Celsius generated strong operating cash flow of $147 million in the first half of 2025. And $615 million of cash provides flexibility for innovation, international expansion, growth, and debt reduction.
We ended the quarter with $615 million in cash, providing flexibility to support our innovation pipeline, international expansion, and other long-term growth initiatives, as well as debt reduction.
With the addition of Alani Nu, Celsius holds 17.3% of the market, with the nearest competitor C4 at only 3.2% share. Adding Alani Nu to the Pepsi distribution network will allow the brand to scale and capitalize on momentum. This is what everyone is missing. Short interest is the lowest it has been in the last year. Shorts bet that the stock price is going down. In the last 6 months, hedge fund holders have increased almost 21%. The shares they have owned has increased almost 15%. And this is all while the stock is up over 76%. All of these are incredibly bullish signals for the stock.
This Coke tastes like Pepsi.
When it comes to any stock, I let the numbers tell the story, and that involves looking at the company's financial statements. Would you buy a house without knowing the size, location, dimensions, or condition? That is exactly what you're doing when you buy a stock without understanding the 3 financial statements. If you want to see how I teach the world's top financial analysts on Wall Street, check out my school community, Win Like Wall Street. Just scan the QR code on the screen. The balance sheet shows us how the business is funded. If assets grow faster than liabilities, equity increases, and we win. As mentioned earlier, Celsius has a big exposure to Pepsi, with over 60% of accounts receivable coming from Pepsi at year end. But the exposure has been declining over time. And they haven't even tapped into distributing Alani Nu through Pepsi's distribution network, which will open up an entirely new growth opportunity. With a physical product business like Celsius, we need to monitor operating working capital. This consists of accounts receivable, inventories, and accounts payable. We measure how efficient they are at managing this via the cash conversion cycle, which looks at how fast a company sells its inventory, collects receivables, and pays suppliers. Over the last 4 quarters, Celsius has decreased its cash conversion cycle by over 60%, despite the Alani Nu acquisition, which is incredibly impressive over such a short time period. Retained earnings has increased 4x over the last 6 quarters, going from almost $59 million to over $236 million. This is the net income that Celsius reinvests into the company, and considering this was negative in 2023, it shows the company is on the right track. So what's the takeaway? Celsius is managing working capital efficiently. Retained earnings is positive and growing. The future is looking bright. The income statement shows us if the company is generating profits. We want to see revenues grow faster than expenses, which will grow profits. The way we determine how effective a company is at generating profit is via margin. Revenues minus expenses equals income. Income over revenues equals margin. If a company has higher revenues and lower expenses, it will have higher margins. If revenues grow faster than expenses, margins will get bigger or expand, which is what we want to see. Revenue has increased over 5x since 2021. And while Pepsi was nearly 60% of the total in 2023, it's now only 1/3. With the addition of Alani Nu and Pepsi's distribution, this momentum will continue. Gross profit has grown even faster than revenues at 6.5x, and this is one of the most important metrics for beverage companies. When we look at the margins, which have gone from 40.8% to 50.5%, we see that not only is Celsius growing rapidly, but they are also reducing costs at the same time. Net income has grown 27.3x from 2021 to 2024. This is important because this is what drives retained earnings and ensures reinvestment in the business. It is also the primary catalyst for operating cash flow, which we'll see next in the cash flow statement. So what's the takeaway? Revenue is skyrocketing, costs are reducing, and with the Alani Nu acquisition, Celsius is set to crush the energy drink industry. The cash flow statement tells us where the cash is generated by the company, and there are 3 buckets. Operating, which is the cash the company generates internally. Investing, which is the cash demanded for long-term growth. Financing, which is the cash the company generates externally. When we add these together, we get the net change in cash. We want to see companies generating cash making this positive, not losing cash, which would make this negative. Operating cash flow has more than doubled since 2022, driven by the strong net income that Celsius is generating. This is what drives value, which we'll see next in our DCF valuation. In 2024, Celsius made a splash with the $75 million Big Beverages acquisition. The strategic transaction provides Celsius with a 170,000 square foot modern manufacturing and warehouse facility that's expected to provide greater supply chain control, quicker innovation cycles, and greater production flexibility. The acquisition of Alani Nu is an absolute game changer for Celsius. It is growing at a 2-year compound annual growth rate of 49%. It has an impressive portfolio beyond energy drinks, and it taps into the highly loyal female demographic, which Monster and Red Bull have not been able to tap into. So what's the takeaway? While the Pepsi partnership has proven to be an incredible move, allowing Celsius to grow rapidly, the recent major acquisitions of Big Beverages and Alani Nu put Celsius on a new path of growth and expansion. So what do I think about Celsius and what should you do? I'll get into that, but first, let's go through my valuation. On Wall Street, we build a discounted cash flow model to measure the intrinsic value of companies. Because companies generate cash flow and we projected the 3 financial statements, we could take these future cash flows, discount them back to today to get a current intrinsic value for the company. We cannot do this type of valuation with crypto, baseball cards, or art because they have no cash flows. As you can see on the left, we take specific line items that we projected from the 3 financial statements. We use these line items to calculate free cash flow to the firm, or FCFF. To this, we add a terminal value, which is the value from the end of the model out to infinity because the company does not stop operating when our model ends in 5 years. We discount these cash flows back to today to get to total enterprise value. To get to equity value, we strip out the debt, we add the cash, we strip out non-controlling interest, we add associate investments. We get an intrinsic equity value of a little more than $18 billion. We divide by the current shares outstanding. We get an implied share price of almost $70 per share. Compared to the current price, we get a discount of 17.4%, which is a hold rating. On Wall Street, if a stock is trading at greater than a 20% discount, it's considered a buy because it provides us a margin of safety. I'll give you my thoughts on how to play Celsius stock later in the video. So what does Wall Street have to say about Celsius? Let's cover that next. Wall Street analysts were impressed by the 2Q earnings from Celsius, and the price targets were raised across the board. While some analysts see limited upside after the big run, others think that this is just the beginning. Bank of America raised its price target from 35 to 40, but gave Celsius a sell rating. They said that despite solid fundamentals and Alani Nu progress, the valuation remains rich versus peers following the post-earnings move. Morgan Stanley raised its price target from 42 to 56 and gave Celsius a hold rating. They maintained a neutral stance and acknowledged momentum, but they balanced this with valuation and execution considerations. UBS raised its price target from 57 to 64 and gave Celsius a buy rating. They cited strong Q2 beat with top-line growth, gross margin, and operating margin ahead of expectations. UBS sees a solid catalyst path and favorable risk-reward ratio for Celsius. CapIQ gives me a sense of how other analysts on Wall Street view the company. 20 analysts cover Celsius on Wall Street. The range is from a low of 33.50, which is a 44% decrease, to a high of 68, which is a 14% increase. The median is 60, which is a 1% increase. The overall rating on a scale of 1 to 5 is 1.86, which is an outperform rating.
You should seek the advice of an investment professional always. I do not know your individual financial situation. This content is meant to educate and is not investment advice.
That being said, I do own a position in Celsius. I am very excited about the Alani Nu acquisition, and it's currently the 6th largest position in my portfolio at a weight of 6%. If you decide to buy Celsius, you need to get in at a good entry point, which I'll reveal shortly. Alani Nu not only contributed to the 84% year-over-year increase in revenue, the $50 million of cost synergies will pay big dividends moving forward. And Celsius is capturing the women demographic and Gen Z, something that Monster and Red Bull have struggled to do.
Ladies first.
We expect to achieve $50 million of run rate cost synergies over 2 years post-closing, contributing to strong pro forma profitability and significant cash flow generation.
They paid $1.8 billion for Alani Nu. I think it closed April 1st. And that brand has done something that Celsius and Monster and Red Bull have kind of struggled to do, and that is, hit that women demographic, Gen Z also, but mostly the women demographic. And you can see here on this chart, I mean, that is some incredible growth on a year-over-year basis.
Celsius is actively building outside of the US. It set up a Dublin hub to run international operations for packing, sourcing, and distribution. They expanded to the Netherlands in late May. In mid-July, they won an award for New Beverage of the Year in Australia and New Zealand. And the results are showing, with 27% year-over-year international growth. The Pepsi system is helping open doors abroad, creating more growth beyond the US.
They're internationally growing plus 27% on a year-over-year basis. So they're doing really well. And in the category, like I said, the energy category overall is about plus 15% year-over-year. They're, as a company, plus 29, so almost double.
The category itself is expanding rapidly at a compound annual growth rate of almost 9%, creating a rising tide for leaders like Celsius. And in 2Q, Celsius outpaced the growth of the market across nearly every key retail metric. Celsius recently hit a 52-week high of 63 in mid-August, and it's down over 5% since then. Celsius hit its 52-week low of 21.10 in mid-February, and it's up over 182% since then. Celsius is the number 3 player in the functional beverages space behind Monster and Red Bull, and the Alani Nu acquisition will help them grow and take market share. My model shows a value of 70, which is a 17.4% discount at current levels. On Wall Street, we buy with a margin of safety of at least 20%. So Celsius is a hold at current levels, but I would be looking to buy below 58 to provide the 20% margin of safety. With only 1 quarter of results from Alani Nu as part of Celsius and the future integration of Alani Nu into the Pepsi distribution network, we should see some exciting results coming from Celsius over the next few quarters as momentum and international expansion continue.
I need a drink.
If you like this and want to see another in-depth stock valuation, check out my Tesla video here or my PayPal video here. And if you found this valuable, please share this with someone who you think would enjoy this. As always, be relentless.